This is an Uncovered Japan Company research report on SPRIX, ticker 7030. SPRIX is a Japanese education group combining individualized tutoring, group cram schools, video lectures, and proprietary learning content. The central question is whether its high-return domestic engine can justify the investment in an overseas testing platform called TOFAS, while a shrinking domestic student population remains a real constraint. At the report's June 2026 reference point, SPRIX traded on a forward price-to-earnings ratio of 13.4 times, with a 3.50% dividend yield and FY 2025 return on equity of 10.9%. The report's score of 12 out of 20 reflects solid growth characteristics, but only moderate value and macro scores, plus a weak supply and demand score caused by sparse trading and no institutional coverage. SPRIX's product is not a single school format. Morijuku provides individualized tutoring, with one teacher serving at most 2 students. Shonan Zemi supplies group tutoring, while Kawaijuku Manavis combines video lessons with local study support. The company also develops its own materials, including Foresta textbooks, Dojo tablets, and Kureo programming lessons. This lets it keep content economics in-house and serve students across more stages of their education. The segment chart is the most important starting point. Morijuku generated 53% of sales in FY 2025 and a 25.7% operating margin. Shonan Zemi added 27% of sales at an 8% margin, and Kawaijuku Manavis supplied video-based learning at an 11.9% margin. The problem is the other segment. It made 11% of sales, but lost money heavily, pulling the group's consolidated operating margin down to 6.2%. The income statement shows why the case is not simply a mature tutoring story. Revenue compounded at roughly 7.9% over 5 years, reaching 35.1 billion yen in FY 2025. Operating profit fell sharply during the FY 2023 and FY 2024 investment phase, then rebounded 98.5% to 2.17 billion yen in FY 2025. The report attributes the trough to deliberate spending on integration, content, overseas expansion, and rebranding, rather than deterioration in the Morijuku core. Cash flow gives the rebound more credibility. Operating cash flow reached an estimated 3.58 billion yen in fiscal year 2025, and free cash flow about 2 billion yen. The business benefits from negative working capital because parents pay tuition in advance. That is why a lower equity ratio does not automatically signal financial weakness here. Deferred tuition is a liability, but it is also cash already received. The business has been able to fund school openings, dividends, and overseas investment internally. SPRIX's moat is less about a brand name than a connected system. A student can move among individual, group, and video formats as their needs change, reducing the leakage a single format competitor faces. The company owns its materials and digital content, allowing faster curriculum updates and potential licensing income. Founder Hiroshi Tsuneshi controls 48.6% of voting rights, which can make decisions quick and aligned, but also concentrates governance and succession risk in one person. The potential re-rating catalyst is TOFAS, an international basic skills test with 15 million cumulative examinees. In August 2025, SPRIX signed a Memorandum of Understanding with Egypt's Ministry of Education for textbook development and nationwide rollout. That opportunity is still unproven. The overseas business lost 671 million yen in fiscal year 2025, but a successful licensing and examination model could scale more profitably than operating schools. The Egypt rollout is the single most important strategic indicator to watch. The valuation chart prevents a common mistake. SPRIX's reported PE rose above 20 times in FY 2023 and FY 2024, but that was mainly because earnings collapsed during the investment phase, not because the shares became expensive. On normalized earnings, the report places the historical range around 10 to 13 times. Today's 13.4 times forward earnings is therefore closer to fair value than obvious distress. The upside depends on whether the other segment loss narrows and profits recover further. The report's 3-year scenario framework is deliberately broad. The bear case reaches 900 yen, about 15% below the 1,062 yen reference price, if demographics, competition, and overseas losses worsen. The base case is 1,450 yen, up 37%, assuming steady domestic expansion and gradual margin repair. The 2,100 yen bull case requires TOFAS monetization and a stronger re-rating. These are research scenarios, not price targets or investment advice. The risks are not cosmetic. Japan's student population is structurally shrinking, so domestic school growth must come from market share, new regions, and price. TOFAS could remain a cost rather than become a second engine. Generative AI may make some tutoring services cheaper or less differentiated, even if SPRIX's in-house content provides a partial hedge. Finally, low trading liquidity and a high credit ratio mean the shares can remain discounted or become volatile independently of operating progress. SPRIX combines a high-margin domestic tutoring engine with a real but unproven overseas option. The opportunity is that the core business continues to grow, while losses in new ventures narrow, allowing the market to see a more scalable content and testing platform. The counterweight is demographics, founder concentration, liquidity, and execution risk abroad. The practical indicators are Morijuku student and school growth, the other segment operating loss, progress in Egypt, the company's annual guidance delivery, and any change in capital return policy. For a much deeper look, visit the free deep dives at uncoverjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security. Always do your own research.